Hello, everyone, and welcome to Market Talks. I'm Ray Salmond, head of markets at Cointelegraph. Here on the show, we discuss what's shaping the markets with valuable insights from industry leaders, traders, and influencers. On this week's episode of Market Talks, we have David Gamble, who's an account executive and business development specialist at Blockware Solutions, a Blockware infrastructure company that provides Bitcoin and cryptocurrency mining services. Prior to working at Blockware Solutions, David was the vice president and portfolio manager of Sarson Funds. David is also the founder of Bitcoin Wolf, a crypto trading educational platform. How's it going, David? Thanks for coming on.
Hey, thanks for having me.
Yeah, thanks for coming on today. I hope everything's good with you. Bitcoin is doing what Bitcoin does, which is basically prices going up or prices going down. We're in this kind of pre-halving consolidation zone, and the market is kind of always being impacted by some unforeseen landmine. This week being the whole curve finance and CRV price issues impacting altcoins and potentially investor sentiment for Bitcoin. So I'm looking forward to digging into some of that with you today. So as an analyst on a higher time frame kind of perspective, what are your current views on the market structure in the crypto market now?
Yeah, I think that the SEC has definitely made it extremely prominent that they are coming down on crypto. Along with the fact that we've seen, BlackRock in the recent XRP news, and you have funds like Valkyrie, and even today with the recent news with ETFs that a little bit more clarity around Ethereum and ETFs, and these are things that are happening now. Ultimately, this is we're in a very pivotal point. Okay, the market structure and where we're at right now is really gearing us to get to that $10 trillion market cap, as an industry. I think that there is, since 2018, 2019, when we first started to flirt with the idea of seeing $1 trillion market cap, which coincidentally was right around the same time that there were other projects involved within traditional finance that have to do with very specific blockchains, more centralized blockchains, such as that of Project Ion. This has been a very serious matter. So I'm extremely excited to see where this landscape goes. I think that the market structure is exactly where it should be right now, and I think that we'll end up seeing that this is going to pave the way for the future. This is what we've kind of been waiting for in the last few years. So it's exciting to see how the turnout's been.
In terms of day-to-day price action, we don't see a lot of inflow. Like Bitcoin's showing record low volatility right now, like multi-year low volatility, inflows into the actual crypto space coming from VC funding and coming from coming into like managed products, ETPs, all that sort of crypto funds stuff. Those still remain quite muted. So what makes you think that a turnaround is around the corner?
Well, it's a couple of things, really. Really, I think you as regulation comes in, there's going to be less volatility. That's just it. Kind of goes hand in hand. Regulation breeds involatility. That's what it does. And I think that now that we are starting to see the rise of more traditional institutional players come in, and this become less of an entrepreneurial kind of space, which it still is, but I believe that there is a lot more room for upside for institutions. That being said, I mean, as someone in the mining space, this is the perfect situation to be in, right? Because we're being agnostic with price. We want to see, you do want to see price kind of in a range bound situation, right? And kind of leading into this, leading from the fact that we've had, past, hacks, and you had the Three Arrows Capital, and you had, Celsius, and all of these guys who've basically gone under, or what have you. these are the there was a lot of bad actors in this space, right? And rightfully so. VCs have a responsibility and a fiduciary responsibility to be very, very attentive and do their due diligence beforehand in allocating capital. So I think that the ice is starting to thaw. I do think that we're going to start seeing a lot more capital inflow come in, especially since the last ruling of the Ripple case, and seeing that, and as well as a little bit more clarity surrounding the fact that Bitcoin is a commodity. It's a property. Excuse me. So I think that paves the way, right? The biggest pillar really was making sure that Bitcoin is a property. After that, everything else goes.
Do you have any short and long-term expectations for Bitcoin's price action?
I think Ray is. Here's the thing, right? Like I think that the on a short and long term perspective, I do see on a macro. I'm extremely bullish on the macro side, right? Short term, not so much. I do think that we do see some downside, just briefly. However, historically, 8 to 9 months, and we're right around that area. 8 to 9 months prior to the halving, we do start to see that bull market trend start to pick up. I mean, year to date, we're north of like 70 or 80% from market lows, right? So, I mean, on a price point, Bitcoin is actually doing extremely well, right? Just on a price point perspective. That being said, I would not be I would not be surprised to see that Bitcoin stays in this range just for a little while longer. Right now, what that looks like, no one has a crystal ball, but I do think that we're starting to kind of itch out of that bear market cycle, and we're starting to see some clear ground here.
So by more downside, what would you say? Like, could you put a percentage to that? Could you put a certain price level to that? And for what reason might you think Bitcoin could see more downside in the short term? I think short term being like 3 to 4 months.
Yeah, I think that over the next 3 to 4 months, I actually don't see Bitcoin going down lower than I'd say 15% or so over that span. I just it's this is an environment right now for regulators to take hold, right? And ultimately, if we do see downside, and when we do see some downside, it may end up coming from the altcoin space, just because of the clarity surrounding uh, you know just altcoins, certain altcoins being securities, right? I think there's going to be a lot of shed on that. There's going to be a ton of bloodshed that's ultimately going to come back to Bitcoin. Um, and that's not being me being a Bitcoin maxi, but I am extremely optimistic in the circulation and supply uh, that kind of comes back to Bitcoin.
All I see Gensler and SEC doing is like saying, no, 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 fine, 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 fine. But there's no regulatory framework. So I know Republicans in the House are pushing out kind of a crypto regulatory framework and a set of rules that might actually provide some clarity and a way forward so people can safely operate and build things in this space and make them sticky. But generally, the last 2 years, it's just been all punitive. Like it's all been punitive and pure punishment and kind of legislating on the fly through the SEC, which Gensler seems to be attempting to kind of exert his jurisdictional claim over all things crypto, right? But we haven't made any strides. The fact that last week's story about Coinbase saying that the SEC told them to stop trading everything except Bitcoin, and then the SEC saying no, we didn't, and then Coinbase itself coming out and saying, yeah, they didn't really say it like that. That's just proof that nothing's getting done. So we will see, won't we?
Well, yeah, I think so, and ultimately, just not giving praise to Gensler. I don't want to be that guy, but I will say that he has a very, very important position here, right? Like there's the reality is that somebody has to sit in that seat and has to make those decisions. And right now we've Bitcoin is the best and most innovative technology that we've seen in the last 5,000 years. We're talking about the fact that there is, a digital store of value, um, the first time ever in cyberspace, right? Digital property, and that is legendary, right? So these decisions that are made today are going to be here for the rest of our life, especially since we're going into this new age of AI and other really cool things that are coming up. And again, right, like, the reality is that we don't know what's going to happen. And sure, there's a ton of back and forth. I don't want to get into that, but um, like, there's a path forward, is what I'm saying.
Yeah, I agree and disagree with you. So the US and all regulators could do a better job at kind of working more symbiotically and transparently so that
Mhm.
industry can originate here and industry can
Right.
stay here, right? And jobs can stay here because what they're doing now is basically pushing all the builders overseas and making it hard to innovate here. So I wish that government was more efficient, right? I bet we can agree on
Right.
that.
I agree. Yeah, yeah, I agree. I agree. I
So
agree.
you work in the mining space, and up until I would say really maybe 2 years ago, or the last
Mhm.
2 years, the Bitcoin mining space it had been kind of, what's the word for it when you can't, opaque. Yeah, it was opaque. It
Mhm.
was they're kind of an elusive species, these miners, right? And a lot of their actions took place over the counter and beyond Bitcoin network data and on chain data, which has also kind of grown a lot and become a lot more expansive and easier to interpretate. And it's now data science, right? And people use that
Mhm.
in their trading. But beyond that, there wasn't much insight for the public or for retail investors into what Bitcoin miners did, how it impacted price, how it impacted kind of like the decentralization and safety of the network and just how integral it is itself to everything about Bitcoin. So, what would you say is something that the Bitcoin mining industry? What's something about the Bitcoin mining industry that people overlook or are completely unaware of?
Yeah, it's a great question. Top of mind, I really think that the thing that people really overlook is lead time, right? Or at least one of those things, right? And there's two
What
things
is
here,
that?
right? Lead time is is the time at which you're actually purchasing the miner, and then they come in, right? So in that time, you can have opportunity cost, right? So you're looking for the most efficient, most quickest way to get your miners online and hashing. That's the key to the game, right? You don't want to necessarily get stuck in a moment where you're, like a core scientific or something, and you've bought thousands of rigs that aren't going to be delivered for 6 or 7 or 8 months, right? That sometimes doesn't work. Of course, there was other variables there, but you ideally you want to be in a situation where you can get your miners as quick as possible and get them hashing as quick as possible. Um, and on the and on that topic, right? You also want to make sure that you're getting to the point where you have and can find liquidity, right? So one of those things that people really don't seek or don't really think about kind of coming into the mining space is the commoditization of these miners, right? So these are no different than buying glass bottles at this point, right? Or is or just buying some kind of uh, you know asset, right, that has value that you can essentially produce quote unquote cash dividend on, right? So the idea now, and something that's really cool and interesting, at least specifically with Blockware and where we're revolutionizing the game, is a marketplace, right? In 2018 and 2019, having the idea, having the ability to be able to buy in and sell out of certain miners, that was far misunderstood, right? The whole industry in the mining space has been very OTC based, as you mentioned, right? So everything is really going, happening in Telegram and some of these social media outlets, and it's very inefficient, right? Where we've kind of come into play and where things have gotten a lot more creative and a lot more efficient is the marketplace that we offer, right? So we're talking turnkey mining. You own the miner, you own the hardware. It's your miner, it's your hardware. You're not buying hash rate, and you're online within 24 hours, right? The same day. We can buy a miner, now you'll be online by lunchtime, right? Yeah. So that's one of the things that miners in certain kind of the retail public doesn't really think about, until you realize that there is there is gain to be made with the miner itself, because that price correlates with does go with the price of Bitcoin in certain aspects, right? Like so that's a really interesting point there. And we do have a screen share here, so I can show you just a little bit about what that looks like. Yeah, so this is the marketplace, right? So the marketplace is super interesting because you're able to kind of go on here, you're able to look at the miners, and you can take a look at the specs of the miner. You're able to see this, and at the click of a couple of buttons, you're able to purchase a miner, right? So on this here, you're able to see everything about where this miner is located, the hash rate, the power usage of the miner, the revenue, the gross revenue of that miner. And you're able to, you're not only are you able to make, a purchase on a miner, but you're also able to do a bid, right? So this is a really cool fun feature here, and you're actually able to take a look at, possibly like an S19J Pro 120 terahash, right? And I might put a bid in here for, let's see, maybe it might be like 0. What's the current rate for the miner? Anyways, yeah, I might put a bid in there for, for maybe a couple of satoshis or something, or a couple, whatever it's going to be. And I'm able to put that bid in. If it's taken, it's taken. At this point now, you can actually see the last open bid, right, and the last accepted bid and ask for this miner, right? So which is really great, right? So this functionality is amazing. So I'll actually put one in now live, and hopefully it gets picked up, right? So kind of lowballing a little bit, right? But that's the market. And bid successfully created, and if it's taken, then I'll purchase this miner, and that's the reality there, right? So as you can see here, there's been a few bids there, and we'll see what happens here. But yeah, I mean, this is the new age. This is revolutionizing the market, the mining space as it is, right? So super great feature, super great efficiency within the mining space, and this is something that I think in the forward in the future, looking forward, something that we can expect to see a ton of volume, and just a new asset class in itself.
Yeah, I get what you're saying about it. It allows for the instant access to liquidity. And for miners that want to get mining and have a certain order quantity that they want to secure, they can do that faster,
Right.
kind
Yeah.
of like in a more trusted place with a better broker than how we used to have to do things, which was like talking to someone in China and hoping that they would send you the stuff, that it would be working. If some of the stuff is broken or it breaks, you send it back.
Right.
There's an expense with that. You don't
Right.
know like when you're going to get it back. There's a language barrier. So, a universal marketplace place for people to kind of put out their ask and set their bids. That is a good thing.
Yeah.
Regarding mining,
Yeah.
should someone start mining now, or would it be wiser to wait until after the halving? Or an alternate of that question now is, if you're not mining now, are you not going to make it?
I think that if you want, so there's a specific cycle, within the mining space that certain people also don't look at. And I think that the truth of the matter is that you should always be stacking Bitcoin. This is just in my personal opinion, right? Not
Yeah,
financial
not
advice.
financial advice.
Correct. I think that the reality is that if you could, if you could get your hands around the fact that mining is the best way to actually dollar cost average into Bitcoin, there is no secondary to that, right? The real answer to that really is, at least to the retail, is getting educated, right? I think there's a big gap here, right? And I do think that mining is a great strategy right now. I mean, what other industry could you make 29% in right now? Right? That this is what you're making today with Bitcoin mining per annum, right? That's 29% per annum with like S19 XPs. There is no other industry right now that you're going to be able to, number one, build and get a scarce asset um, on a consistent basis and be able to see that, not just on a monthly basis but on a daily basis, right? So you're constantly seeing these sats kind of come in, right? So to the accumulation of 29% a year per annum, and that's based on Bitcoin spot price today as it is today, right? So of course that
Right.
does change, but I mean, when you're just looking and putting pen to paper, I mean, we're thinking about real estate investment trusts and RELPs and some of the other products, right? As for myself, coming from the mutual fund background, I mean, some of these guys offering 7, 8, 9%, that's barely hitting inflation. Bitcoin, at least for in this sense, right? Over the next 10 years, you're looking at Bitcoin seeing a minimum of 150%, right? In terms of just your gross, right? Like in terms of that, right? So with this being said, I mean, you have a ton of upside here. Plus, you're buying the asset of having and getting that access to a dual exposure kind of market. Where you have both the asset and the miner itself, right? So you have a lot of things working for you.
Right. So you said people should be buying Bitcoin as frequently as possible. And of course, like allocation size has to align with one's risk and tolerance for loss and all that sort of thing. But recently there was this report floating around. I forget if it was BlackRock or whoever. It was from like 2 years ago, right? And in this study, uh, the person that wrote it was suggesting that the 60-40 portfolio is dead. The 70-30 portfolio is dead. Bitcoin allocation should be like 85%. What's your thought on
Mhm.
that?
I mean, as a Bitcoiner myself, I think Bitcoin allocation
But
should be
beyond that,
100%.
like realistically, realistically though, like for your mom, for your dad, for your grandparents, for your little brother, I don't know, for your brother's fiance, for the average person who's working 40 hours a week, has
Yeah,
whatever. They have a certain amount of debt that they're trying to pay off. They are moderately, they're moderate in their investments. They're not looking at charts all day long.
right.
Someone comes to the HR, to the break room at their job twice per year from Charles Schwab and like talks to them about portfolio rebalancing and all that. We're talking about that type of person. What's your thought on
Right.
85% allocation given the current economy, um, the kind of like compound return people are getting from markets and whatnot? Like, is that reasonable? Is that unreasonable? Will it become reasonable? What's your real thought on that?
85% allocation for the retail public is just unrealistic. That's not happening. It's not. But I do think that there's room to say that 10 to 15% is something that you should be looking at on a consistent basis.
That's a bump up from 1 to 3, isn't it? 1 to 3 was the guidance from Pompliano and the Paul Rhodes, those guys, like 1 to 3 years ago. That's what they were saying. So 10 to 15
Yeah,
is still a sea change, isn't it?
it is. I mean, I think that at this point, sure, you could say, and I mean, we're just looking at the landscape, right? I'm talking about getting ahead of inflation, right? And ultimately, right now, I mean, there's so much that's happening in the space, and there's so many people that, are trying to just meet ends meet. Uh, you know, the one thing that you can do is to just swap out one asset class that doesn't have much value into another. And that one thing that has more value is going to be Bitcoin. And Bitcoin, year upon year, is creating value, right? We're at 100% a
I
year.
get that within your
And there's
portfolio. So
correct.
getting rid of REITs, maybe your REITs allocation or your, I don't know, something else that's underperforming and making a heavier allocation to Bitcoin, whether it be to Bitcoin mining stocks or to Bitcoin itself or other companies that are kind of like proxy investments to Bitcoin. That could be a way forward. I get what you're saying there.
Yeah, absolutely.
So we met
Sure.
up in Miami at Mining Disrupt, and all the Bitcoiners were there. All the Bitcoin gear was there. It was great. But we also talked a little bit about DeFi, and I know that you have a lot of experience with like DeFi treasury management and stablecoin, the whole stablecoin aspect of DeFi and whatnot. So, honest question: is DeFi dead? Based off of this week's kind of CRV and curve finance thing, it's it's unexpected, but it was bound to happen. So is DeFi dead?
I don't think DeFi is dead. I think that DeFi is in a building phase. Um, you know, uh, Look, I think that over the last, since DeFi summer, I mean, we've had tons of hacks that's happened, right? I mean, this week specifically, with the Curve, Viper situation that's happened and occurred. Um, it's unfortunate, but these are honeypots, and these guys are getting hit left and right with, with a ton of malware and a ton of foul play, right, from different hackers around the world. Ultimately, I do think that DeFi is in a point right now where, yes, we've definitely seen not really the worst that could happen. I think that there's actually going to be more. My personal thought is that I would take a step back a little bit. Ever since the recent news with Ripple and everything, I think, there's a little bit more clarity in terms of how things will ultimately play out. I'm actually not, I'm super bullish when it comes to a lot of the layer twos that are out there. However, I'm not so optimistic about, some of the other protocols out there and what their whole mandate is. Right. Reason
I
for
gotta
that is,
interject.
yeah, yeah.
What could be worse in DeFi than Curve Finance blowing up? What could be, which it hasn't yet? What could be worse than we're kind of ignoring the fact that the founder or co-founder collateralized like 50% of the
Mm,
available supply, right? And
yep.
that's it's not the Viper hack; it's the fact that there's so much kind of bad debt on that one side that
Right.
now Curve is looking like a contagion threat to all of DeFi because of these liquidations. But I mean,
Yeah.
beyond these recent events of this week, then we had like the whole DeFi thing with Terra and Dokwon and SBF's kind of experiments with DeFi and all the Sam coins. Like, what could be worse coming to DeFi than all of that, in your view?
And I'll kind of piggyback on something you said here, right? And it's the toxic debt, right? And the only thing that could be worse is, you know, uh, really the elimination of more stable coins within the space, and that's going to happen regardless, right? Because ultimately most of these protocols, they wind up creating their own stable coins, which ultimately has some kind of effect on a bigger stable coin at play, right? And whether they're over collateralized or possibly more based on like an algorithmic type coin or stable coin, you know it could be, there could be a lot of fallout, right? I think protocols like Aave, I'm looking at very closely, just to see how they manage that toxic that
Mm.
unfortunately Curve kind of put out. And also, protocols like Frax as well, right? Like these guys are, we're in this is a time battle right now, and I think that unfortunately, Curve being like the center of swaps, of stable swaps, um, this was not a good thing for the DeFi sector. Now, on that other
Hmm.
side, I do think that this kind of paves the way for, the better situations to happen, which is looking at a lot of uh, looking at a lot of these protocols that have specific RWAs, that are actually integrated within their treasury, right? I'm speaking about Maker, right? I think that these are protocols that actually have a really, or even something like Epoch or some of the other protocols out there. And this is not me shilling. I'm saying that there are applications and protocols out there that are more geared towards getting acquired through institutions, because that's ultimately what's going to happen. I look at the DeFi space as most of those protocols being securities. I think that they have a very short lifespan. I think that Curve is the first of many behemoths that will probably end up going, but ultimately there will be there will be a path forward, where many of the protocols that are kind of doing their homework and getting a lot of their stuff together in terms of making sure they're operating correctly, are going to be in the best position possible to get acquired, and to be able to work with companies and bigger companies and banks like JP Morgan and some of these other guys who may look to get involved in the DeFi space a lot sooner than what we may otherwise think.
Yeah, yeah. Hey, this is kind of a joke and not a joke, but you could say the most robust entity within DeFi is Tether.
Mm,
Did you see their attestation that came out this week? I mean, it's stupid if you believe if you believe their balance books. And like I'm in no position to critique them and say that they're not valid, but man, the amount of real world assets that they have, in their portfolio is insane. The revenues are insane. The treasury is insane. They're moving into
it's like
Bitcoin
90
and
million, right?
Bitcoin
That they're making.
mining. Yeah, 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 yeah. And supposedly so many Tether being backed by treasuries and whatnot. Like, come on, that's possibly the best DeFi company right there. I guess, except that it's not like really that decentralized. But then USDT is endemic to all of DeFi itself, right? Like as a stable coin. So kind of funny. Last question, and we'll wrap up. In your opinion,
Sure.
what is the number one best way for retail investors to successfully invest in crypto without getting wrecked?
Man, that's a great question. I think that the best way, inadvertently, is going to be to get educated. I stand by that. The reality is that most retail has no idea of how many facets and what's available to them at the end of the day, right? Like, there really comes a point in time where you have to take initiative in wanting to learn about the asset that our public, in our economy is pretty much kind of all circulating around, right? Where this is the talk of the town, right? In a lot of different sectors. And for any retail person who's kind of coming into the space and looking to just not get wrecked, get exposure, sure, buy Bitcoin, buy spot Bitcoin. But I think, like I do think that having that education piece, to seeing what else is out there, how you can actually best utilize your capital to make the wise decision, is extremely important. There is no you unfortunately, I mean, for me, kind of coming up in the space, it wasn't as easy as just going on YouTube and looking at these videos, right? There's Everything is at your fingertips. You have great mediums, you have great locations here that you can look to seek to find a lot of great information. And yeah, I mean, yeah, I would suggest starting with someone like Cointelegraph, or someone like a you know uh, uh, 99 bitcoins or something, and seeking to go through that threshold of just learning the basics. Learn the basics first. Understand what you're kind of coming into, and then from that point, I mean, Coinbase has been a great advocate, right? Gemini has been a great advocate of Bitcoin, right? So there's really great and easy ways of getting onboarded into the industry at this point. But again, right, you'll always have that resistance until you've gotten educated and gotten a little bit more familiar with the actual product itself.
100%. So don't ape blindly, do your own research. That's like you would
Yeah,
do with anything in life, right? But I like that you
yeah,
say
yeah. BYR.
education and just becoming
Yeah,
more informed and building your own kind of like conviction and investment thesis is the best way
correct.
forward for investing in new kind of like novel technologies like blockchain and cryptocurrency. That's great, great, great advice. Well, David, I really appreciate you coming on today. It was an alpha filled talk. We went a bit long, but we talked about a lot of valuable things. And I think your insights are quite powerful. If people want to hear more from you, where's the best place for them to find you?
Yeah, you can reach out to me on Twitter, dgamble331, or Instagram, d_gamble34.
So there you go. You've got it, folks. David, thanks for coming on today. It was an alpha-filled discussion. I think that some of the takeaways are DeFi's got it's a rocky road ahead, but the silver lining is that institutional entry and real-world assets coming on chain, that gives DeFi just another kind of like real-world use case that is needed. ASICs or Bitcoin miners are a commodity, and building a marketplace where miners can access liquidity and also buy gear that they can co-locate or plug in and start hashing with tomorrow is the way forward. That's a service that didn't exist in previous cycles. And according to you, knowledge is power and knowledge is everywhere in 2023. So it's not easy to go out and like get yourself hip to game in crypto, not in this day and age. It's easy to do that. It's not difficult. So go out and learn.
Absolutely, absolutely, and thank you so much, Ray, for having me on here.
Likewise, likewise. I'll be in touch. Thanks for coming on. Listeners, thanks for tuning in. We're here every Thursday at Market Talks. So like, subscribe, leave some comments.